This LOS is compare types of trade and capital restrictions and their economic implications. Continuing with trade and capital flows, restrictions, and agreements, now we're going to look at some agreements, and we're going to look at trading blocks, common markets, and economic unions. A trading bloc is an agreement among countries to work toward eliminating trading barriers. Trading blocks may be regional, such as NAFTA, which is the North American Free Trade Agreement, or the EU, the European Union, yet there are different degrees of integration possible. So let's look at these definitions. An economic union is a coordination of economic policies among members. A common market allows free movement of factors of production. Customs union is a common trade policy regarding non-members. And finally, a free trade agreement, FTA, is a trading bloc with no trade barriers. Let's look at some bullet points with regards to trading blocks, common markets, and economic unions. First of all, there's increased competition. It will lower prices and increase quantity. The cost of production declines, easier access to natural resources and technology, increased access to technology and knowledge, increased specialization, greater opportunity for economies of scale, increased employment, increased income, but an increased interdependence among members, less chance of conflicts. So these are some of the benefits with regards to trading blocks, common markets, and economic unions. Possible results of trading blocks. One is trade creation, replacement of higher cost domestic production by lower cost imports. Also trade diversion, replacement of lower cost imports from non-members by higher cost imports from members. Some impediments to effectiveness of trading blocks are national sovereignty concerns and also differences in taste, culture, and competitive conditions among the members. We can see that with regards to the European Union, some of the issues with regards to the effectiveness of the trading bloc. Okay? Capital restrictions may affect inflows, outflows, or both, and they may be in the forms of taxes, price or quantity controls, or prohibitions. And it's difficult to distinguish effects of these restrictions from the effects of other policies. So we'll finish this LOS with two quick practice questions. If Brazil and South Africa have free trade with each other, a common trade policy against all other countries, but no free movement of factors of production between them, then Brazil and South America are part of A, a customs union, B, a common market, or C, a free trade agreement. The correct answer on that is A. A customs union extends a free trade agreement by not only allowing free movement of goods and services among members, but also creating common trade policy against non-members. Unlike a more integrated common market, a customs union does not allow free movement of factors of production among members. So the key thing there, it says no free movement of factors production. Well, we can see in the common market, it allows movement of factors production. And also in a free trade agreement, that's a trading bloc with no trade barriers, which includes there's no blocking the movement of factors production. So it had to be a customs union, not too difficult a question. And one last practice question to finish this LOS. Which of the following factors best explains why regional trading agreements are more popular than larger multilateral trade agreements? A, minimal displacement costs. B, trade diversions benefit members. Or C, it's quicker and easier policy coordination. Nice, easy question to end on. I think that was pretty obvious. Which of the following best explains why regional trading agreements are more popular? Because they're quicker and easier policy coordination. Regional trading agreements are politically less contentious and quicker to establish than multilateral trade negotiations, for example, under the World Trade Organization. Policy coordination and harmonization is easier among a smaller group of countries. And that's the last slide for this LOS. Thank you.